So what does the leading venture capital accelerator mean? Well, so last year, 2022, we accelerated roughly 175 venture capital firms worldwide. That means that we took them from maybe an idea all the way to when they have a fully baked plan to launch the funds, and most of them also closed on capital. Okay, to put things into perspective, PitchBook, which has somewhat accurate data, it's not the best data in the world. It's kind of guesswork in many cases. But what they do for this particular piece of data, the number of formations a year, is they go to all the major domiciles around the world and they talk to the registrar and look at the data and they just add up the number of VC firms. Now, it's imperfect because some people start a firm and they never actually close, blah, blah, blah. But their stats show that just under 400 firms venture capital firms were formed last year worldwide, new firms. So to give a sense of scale, we were just under half of all new venture capital firms last year. So that's what we mean by leading. And some of the best and brightest people all around the world apply and join VC Lab to launch their dream venture capital firm and fund. And what we offer to make that experience world-class. And just to give you a quantification of what we mean by world-class, I'm going to try and back everything up I say with data. We do a MPS survey of every cohort. So that's Net Promoter Score. And Net Promoter Score goes from -100, which means no one really likes you, to +100, which means that everyone loves you. And very few firms get above an 80. In fact, I think Apple has 70 something and they're considered world-class, okay? We got an 86, all right? That's really unheard of. If you search for firms with an 86 Net Promoter Score, there are not many of them in the world today, and VC Labs Accelerator is in 86. Interestingly enough, remember I said we had VC Lab, Decile Hub, Decile Partners, and Decile Capital. Decile Partners, which does all the back office formation for funds, that has a 94 MPS. Okay, so that's pretty crazy as well. In fact, I'm like, there's no way to go but down. A lot of times you're like, oh, we want to get better, but at a 94 MPS, there really is no way to go but down. So back to what VC Lab does. So VC Lab helps these firms get started and close on capital. And the way that we do that is the following, okay? First, we have a world-class curriculum that is proven to take you through each step-by-step necessary to close on capital and launch your firm. It's worked with fund of funds, it's worked with emerging managers, it's worked with new managers, it's worked with venture studios. So it is a very effective curriculum. And what it does is that we continually update it to figure out minor optimizations in time. So an average new manager or even emerging manager going out to close a fund can take 12 months, 18 months, and even 24 months. For new managers, the average is 18 months, okay? And that's because there's lots and lots of stuff to do, and you do various things out of order. So you'll talk to a lawyer before you should. You'll try and close an LP before you should. You'll pitch people with bad materials, et cetera, right? And the curriculum says you really need to do this before that, and lines everything up and gets you on this path to close. To give you a sense, the average close time, and this is in older cohorts, because we can only manage close time kind of a year after the program. The average close time for the older cohorts of VC Lab is 5.7 months. I'm willing to guess that the newer cohorts is going to be even less, maybe 5 months. So to put things in perspective, the curriculum takes an 18-month process and consolidates it into 5.7 months. So basically under 6 months, which is 3x time savings, right? Which is, very valuable. On top of that, there are other things. So programmatically, we have 2 sessions a week to help participants in the program. One is an AMA like this, where you can ask any question. And Niels, if you could start checking the questions that are coming in. So put your questions in the Q&A, we'll answer them all. And we have Mike Supervici, head of acceleration, and myself, plus guests come every week and answer every question and work with you through every issue. On top of that, there's a webinar with a top person every week. A lot of those people are former VC Lab alumni that are just crushing it. They're getting great returns. They're closed on lots of capital, and they give you all their secrets on how to do it. But we also bring in experts from the field, top institutional investors, top modeling experts. So every week you're going to have a top person in the field talking to you about this subject that relates to the curriculum and really helping you grow and build your firm. There's a few other things. I'll keep it short. In addition to those 2, so again, great curriculum, weekly help, we'll do office hours. So everyone will get some one-on-one time. Usually it's one-on-one, but there'll be a group of people. So there'll be 5 firms there, but you'll have like a 10-minute slot or whatever to talk through your issues with one of our leaders at VC Lab to help you. So there's one-on-one mentoring as well, again, in a group format, so that if we make a general point, it can help everyone. On top of that, we provide an entire free tool set to build your venture capital firm called Decile Hub. And you can go to decilehub.com and check it out. It's not a great landing page, but there's some information there. This tool saves tens of thousands of dollars. It's got all the features of DocSend, purpose-built for VC, all the features of large CRM like Pipedrive, et cetera, purpose-built for VC, all of the digital signing of DocuSign, purpose-built for VC, et cetera, et cetera, et cetera, more, all the accounting, everything, and it's free. It's free for people in VC Lab. It's not free for the public. In addition to that, it has something called Decile Base, which is a Q&A system based on AI, and we trained it with expert answers to over 1,000 questions from new managers. It's incredible. I mean, I'll show it to you in a moment. How about I go through the things and I'll show you this because it's mind-blowingly cool. Then, there's more, but last but not least, at least for this, we have a very vibrant and very active community of over 1,000 general partners worldwide in Slack. And you can communicate with people in your region, share deals, share insights, share also articles that you see, discuss issues. And it's one of the most active and vibrant communities that I've ever seen, with very, very, real-time feedback from peers, real-time feedback from experts. All of the mentors are in it, real-time feedback from the VC Lab and Decile Group community. So it's a really great perk to being part of this network. Why don't I show you Decile Hub for 1 second, and then we're going to start doing questions. But it really is an amazing perk to be in VC Lab. So, and I'll just show you like a couple cool things very quickly. And then we'll start getting to your questions. So if you haven't gotten a question in yet, make sure to get it in to the Q&A section down below. Okay. Hey, everybody. So this is Decile Hub right here. Let me just see if I can adjust the screen a little bit. All right. So you have on your side all these different sections, right? Decile Base, which is the knowledge base we talked about, data rooms, et cetera. what I'm going to do here is I'm going to go to a classic pipeline like limited partners. So when you add limited partners into the pipeline on Decile Hub, they go into a stage, and we call the process of Decile Hub click to close, and it comes pre-set up with all the stages to close. So let's say you want to set up a call. It comes with emails to set up the call, to follow up on setting up the call, et cetera, right? And it's all programmed. So let's say no one clicks a link or responds to set up a call with you, then it says, okay, after 10 days, move them to unresponsive. And this is all pre-programmed. So you just add your limited partner leads in, and if it's on automatic execution or off, it will automatically just start mailing and working to close people, get calls, et cetera. So set up a call, send the material, send a pact, et cetera. In addition to that, it has all of the digital signing stuff to close LPs. So for example, if I'm an LP and I want to invest in a fund, you can send them to a special page. They can pick the amount, they can fill out their information, and then they can digitally sign down below, right? So then boom, signed and done. And then that pops up over here in your signed stuff, right? In your pipeline, here we go. And all that's automated through the system. Right now, I showed that really quickly. I know some of you missed some of it. It's okay. And you can, by the way, customize the agreement, all that, what the images are, etc., very easily. Just to show another couple cool things. Remember, I was telling you about the AI that can answer any question in venture capital. So you might want to know, like, what is a safe note, right? So you just pop it in here, hit return, and it searches all of our answers by experts, and it will pull an answer for you in real time. And you can ask it anything: accounting questions, operation questions, how to do a deal, but it doesn't answer questions that it does that isn't in this knowledge base. So a lot of the large language models kind of create, excuse my French, like bullshit answers just to sound like it knows. So like, who is Taylor Swift? You know, it might actually say who is Taylor because we have a guy named Taylor, but I can't confidently answer that question, right? So, and then if it doesn't have the answer, you can click this and it creates a question. Of course, I don't want to ask the community who is Taylor Swift. And then we have top experts in the world that will go out and write an answer for it and populate the large language model. So it's pretty cool. On top of all that, and just to keep things a little light, it's got all of the data on your fund. You can see everything. So if I go to hub, it took me to just the generic, let's go down to the data. You can see how your fund is performing in real time, generate reports. You can do things like issue capital calls. Issuing capital calls, by the way, is one of the most painful thing that you can do as a general partner, because you got to know who all your LPs are. You got to then have all their contact information. You got to write a custom email. You got to send it off with wiring instructions. You have to follow up with them. And every single LP needs a different email and instructions based on what their investments are, if they missed any last investments, if they took out a wire fee, all that stuff has to be factored in. It's a nightmare. Well, we fixed that because you can just go over to capital calls right here. You can hit start a call, right? You can enter the amount that you want to call. Let's say you're calling 2,500,000. It dynamically updates what everyone should owe, right? You can write a nice little custom note here, and then you hit this start button and it does it all for you. It creates a custom little thing per LP, creates a message for each LP, et cetera, sends the email, follows up with them, make sure they wire, updates you when someone hasn't wired, and that's it. It's done, right? All for you, automatically, automagically, right? So again, that's one of the other little perks of the program. And there's, as I said, a lot more to it than just that. But I wanted to give you a sense of what everyone in VC Lab is receiving and why the program's so popular, because we just help them to win. So I see a question just came into the chat. Don't put questions into the chat, put questions into Q&A. Now I want to just talk and it's all free, guys. Everything's free. And so then you say, okay, wait a minute. Why is everything free? What's going on here? What's the catch, right? There's no catch. Let's talk about what's going on. The world's broken, right? Deeply broken. And I have no evidence that governments have been able to fix it, that NGOs have been able to fix it, that the companies have been able to fix it. No one's been able to fix it, okay? And they're great attempts. I think the SDGs, the Sustainable Development Goals by the UN, are fantastic. And even the UN is like, there's no hope that we're going to reach them, right? Well, we need hope. We need change. We need to do things differently. And so that's what we're doing. We're doing things differently. We're giving everything away for free. And we're trying to change the world for the better. Because everyone that works with us signs a mensarious oath of ethical investment. So they are ethical investors. And then we're going to help these ethical investors to win. And we're not going to help them win by a little. We're going to help them win by a lot. Because if ethical investors are 5% better than normal investors, that's not a win. Right? And you could make an argument, well, maybe it's this quarter, they're 5% better, but next quarter, they'll be 5% worth, whatever. No, we're going to make them 2 to 5 times better, undisputably better. They're going to have a better network. They're going to have better tools. They're going to have more access to capital. They're going to have better deal flow. And we're going to help get them that so that they win. And then they invest in the companies that change the world in the way that we need so that we can collectively have a bright future. Okay? So it so happens, and thankfully, that by giving everything away for free and caring about a future that's better for humanity, we've managed to do incredibly well as a business. So we only charge for one thing, which is helping with the back office information. That's it. And our rates are literally 50% less than the next most expensive alternative, which might be AngelList or Carta. So we're half the price of these guys, okay? And I don't know, we obviously are doing fairly well. We have 100% conversion rate of people that want to work with us, and we want to work with them. You have to apply, right? We don't work with everyone. So we'll accept a dual use fund into the program if the managers are ethical, but we will not work with a dual use fund at Dassault Partners, because we only want to dive deep with firms that are undisputably making the world a better place. And as a result of that one business line, VC Lab and Dassault Group itself right now is break even and bouncing around profitability, and we're growing like crazy. So so much for all these ideas of like freemium and you got to charge people, and that's we're going to do everything differently because we want to be the change that we want to see in the world ourselves, right? So we're going to be super ethical in everything that we do. We're not going to try and bait and switch anyone, none of that stuff, right? That's the old way. For us, we're going to give it all away for free and charge only for the things that really are expected to be paid for, and try and charge a fair rate that is roughly what it costs to deliver, and which is ironically half of what everyone else is charging, and and be successful doing so. Okay, so I think I covered most of it. I don't know. Is there anything, Niels, that I didn't cover? Maybe a mention of Decile Capital for a second, and then we'll take questions. Are you ready? All right. So very quickly. So I mentioned we've got VC Lab. I showed you Decile Hub. We talked about Decile Partners briefly. Let me just mention Decile Capital for a second. So we want everyone who's ethical working on venture capital to have an unfair advantage. So we've created our own fund of funds because there are no fund of funds focusing on new managers. In fact, that's not exactly true. I think there's like 2 worldwide, and we know them. And honestly, they focus on more emerging managers than new managers, but they do some new managers. So there's not big sources of capital out there. So we created Decile Capital to be one of a few fund of funds to back new managers. And so far, we've done 7 investments out of our first fund. We're going to be doing lots of funds. And we're planning right now to be doing we closed our 7th investment just 2 weeks ago. We plan to be doing about 1 to 2 investments per month going into the new year, and then hopefully accelerating with some new funds even more. So eventually, I'd like to fund every alumni of VC Lab with actually multiple fund of funds, so that if you graduate VC Lab, and let's say you're a woman working on a fund in Africa that's focused on AI, well, we might have an Africa fund of funds that backs you. We might have a fund of funds focused on female manager that backs you. And we may have an AI fund of funds that backs you. And that's the vision. So you can get actually multiple pools of capital from our fund of funds. Now, that vision is being realized right now. So it's in the very early stages. So we are the market leader in the accelerator. We are the market leader in the back office tools. We have a redonkulous MPS in the Decile Partners 94, and obviously Decile Capital is the newest of those 4 things, and I would expect that we would be a market leader there eventually as well. Okay, so let's jump into your questions and see if we can answer them. And again, apologies for being a few minutes late. I was publishing our data. Ooh, by the way, let me share it. So if you want to see, we're trying to be complete. Again, everything we do is different because we think the way things are today is largely broken. So I'm going to paste into the chat. It didn't appear as a link. Let me see if I can put the HTTPS there. This is our actual data, all the actual data comparing cohort 9 with cohort 10, which just finished. And one of the most interesting things is that, I thank you, Niels, for publishing.
No problem.
40% of the firms in cohort 10 had a female general partner. 40%. Okay. I can't even tell you how heartening that is for me. That was our goal. And that was an ambitious goal, right? We said, wouldn't it be great if we can get to 40% of the firms having one female general partner? And we're like, well, I don't know. We set it for 2023, but that's a pretty ambitious goal, and we hit it. So yeah, that's awesome. All right, let's go with questions. I'm getting all.
Okay, so before we do that, one more quick note on Decile Capital. We have an event next week to learn more about it. I will put the link to register in the chat. And with that said, we can go ahead and dive into questions. So the first question is about the deadline for cohort 12 applications. The website shows August 7th.
Yeah, let's talk about that.
Have time to apply.
Yeah, we decided we had the program starting next week. You know what else starts next week? School. for about, a huge chunk of the human population, including my children. And so many people were writing in like, school's starting next week. Can we push it out? Nah, like I'm on vacation right now. I can't finish this. So we're like, oh, we got a little, I don't know if the word is like, we got a little like, oh, we can do anything kind of thing. Like even when school starts, we can start a program. So because we've been just crushing it on the numbers. But so many people wrote in and asked us to delay the start of cohort 12 actual programming. So we moved the start date from next week to August 30th. And so we've extended the application deadline to Friday. But basically, guys, you can get your application in until August 30th or until the program fills up. Now we're at just around 200 and change accepted and enrolled right now. And we really don't like to go over 300. So there's, not everyone accepted enrolls, but give or take, there's about 100 spots left. Now we have like hundreds of applications that we're still processing, which is another reason why it wasn't a good idea to start next week. We're like inundated with applications. We have, well, I'm guessing we'll have 2,300, 2,400, something like that, that have all come in. Right now it's just over 2,000. So, get your application in if there's still room, even up to the August 30th when it starts. But we did extend the official end date to Friday, August 11th. So try and get it in before that. My guess is the program's going to fill up, by next week or shortly thereafter. So get your application in as quickly as possible. Our goal is really to help as many people as possible. It's not to be sort of difficult with admissions. We just want to help as many people as possible.
There is still time to apply, and the link is in the chat if you haven't done so already. Next question comes from Giacomo. With Decel Hub, do we need to use Carta, or does Decel cover what Carta does?
Yeah, so Decel Hub is a software product. So it doesn't cover what Carta does, but we have something called Decel Partners, which is basically like a better and cheaper version of Carta. That's multi-country, whereas Carta, I guess, bought Vauban, but they do a different model in the UK. So Carta is US, UK, and we're also multi-domicile. But we if you work with Carta, we're not going to work with you. We find them unethical, and we don't agree with how they operate pretty much on any level. So if you if you sign with them, they have a $75,000 cancellation fee, which I think is also just unethical. Like, oh, I don't want to work with you. Okay, well, pay me $75,000. Well, wait a minute, what did you do? Nothing. Like, so I owe you $75,000 because you did not, because I signed an agreement that you pressured me to sign. Like, the amount of drama that we've dealt with from Carta, ethical issues, is so much that it's just not even worth working with someone that signs with Carta, because then, like, I'm not the Carta, trauma support person, therapist for your trauma from the Carta mistakes, right? So you don't need, if anything, yeah, don't use Carta, FYI. Is my humble advice. That's just my opinion. Some people use them and are happy, but most people we know are not. And again, you don't need them. You can work with Decel Hub for the software and Decel Partners if you get accepted for the back office. If you don't get accepted, there are other alternatives out there. AngelList is okay. But as I said, both Carta and AngelList are about 2 times more expensive than what Decel Partners is charging.
Someone is asking, if they get accepted and they get access to Decel Hub, is it free forever, or how does that work?
Yeah, so good question. Look, we're kind of like a SaaS business also. Each one of those four things I brought up are business units. The intention is that people that go through the accelerator will get, the basic Decile Hub for free forever. There will be some premium features, of course, right? I mean, there are things we pay for already that we're giving to you for free, right? Like obviously hosting and stuff like that. But there are other things that we're going to be rolling out. Like right now we integrate with Gmail and we integrate with Microsoft email systems like Outlook, etc. There are some tools that allow us to email with tons of different back office email systems like SMTP, everything, and calendaring systems, etc. And they cost, let's say, $5 per user per month. So as we roll out some features in the future, some of them we will expect users to pay for, but the majority of Decile Hub will be free. Now, for everyone forever that goes through the program. Now, one thing of note, do me a favor and use that little thumbs up icon because we got a good number of questions here. We'll try and get through them all. I think we can, but we're going to answer the ones with the most thumbs up first.
We have another question on feature set. Igor is saying great LP pipeline tune, but what about KYC and anti-money laundering? Do we also help with that?
Yeah, so the tool itself, so yes is the answer, but remember, there's Decile Hub, the tool, and Decile Partners, the back office. So Decile Partners does, I would say, industry, the highest industry standard of KYC AML out there today. And when you work with LPs and GPs, there's KYC AML done by multiple parties. So we will do KYC AML with you, but the bank will also do KYC AML. So you're getting multiple KYC AML checks in venture capital, and we do it as well. But that's on the Decile Partners side, not in the tool itself.
Question on applications. Can someone apply as a solo GP and then add additional GPs later?
Yeah, so let's talk about that. I believe 60, the numbers bounce around. If you go to the Go VC Lab, I think it's been updated with the exact percentage, but somewhere around 66%. So govclab.com, we scroll down, let's see, it says 64% are solo GPs right now. And yes, you can apply as a solo GP, complete the program as a solo GP. Now, in terms of adding a GP later, I just want to take a second about this. It's like a startup, but even more intense launching a fund, okay? So, if two co-founders met at a bar the night before, you'd probably be pretty skeptical that that startup would be successful, right? GPs, it's even more. You're making a 10-year minimum commitment, but actually it's more like 16 years because there's fund one, which is 10 plus 2, so call that 12 years. Then there's fund 2, which comes 2 years later, 10 plus 2, right? So now you're at 14 years. And then fund 3, you're at 16 years. So you're really like making a 16-year commitment to someone to work together. And it's very hard to unwind these things. So that a lot of times if a firm breaks up, the firm dies. Not always, but a lot of the time. So back to the point, you really should know any fellow GP that you're bringing on the team incredibly well. Multiple years of a strong relationship. I'd say 5 years or more.
So Melvin's question has pretty much been answered. Do we have a significant number of first-time general partners? Yes.
Yeah, I would say in terms of, first time, so that's not really the term of art, Melvin, but I'll help you here. So it's called new managers, and new managers can, even if you were a VC before and you're starting a new firm, you're called a new manager. When you move to fund 2 and fund 3, you become what's called an emerging manager. And when you're on fund 4 and beyond, you're an established manager, established firm. So back to the new manager question. So yeah, maybe 80-something% of the people coming in are new managers. Now, of those new managers, there are a lot of people who have been venture capitalists before. Some have even started firms before. So if you take those out, you're still in this high 70, like 78, 79% of the new managers are really first time in venture capital. So yeah, a huge percentage. And that's a good thing, because venture capital has been mismanaged, right? It produces fantastic returns, but it's unethical. I'll give you the easiest way to look at this. If you take a firm from 1996, like post email, and you look at the way that firm was run in 1996, almost every firm today is run exactly the same way, right? That's like almost 30 years ago. There's been not a single change. They email LPs PDFs, they emailed LPs PDFs, they email LPs sheets, they email LPs sheets. It's the same thing. 30 years, no innovation in the industry. It's crazy. So we're like, it's just that's just broken, right? We're fixing it, right? We're modern tools. We got data rooms integrated with CRMs, integrated with accounting. That should have happened 20 years ago. Not maybe even 30 years ago. But so we're making a new model. And so the old practitioners are really not great. Now, remember, put your questions in the chat and make sure to upvote them. Let's keep going.
Another question about general partners. What kind of capital investment do they need to bring in while starting the fund?
Well, that really, okay. I can't answer that question. I have to, because you didn't provide enough information, but I'll tell you how to think about it, okay? So you're going to set a fund size, right? And so a lot of what you need to bring in is dependent on what your fund size is. And I'm just going to tell you, everyone's like, I want to do a $50 million fund. No. If you're if you're a new manager, even if you've been a venture capitalist before, even if you've been a top decile venture capitalist before, kind of 10 million or less is what you want to set your fund size at, okay? Because God forbid, you can always go over, but it looks terrible if you go under, right? We have people who set 10 million and closed on 22 million, and they look like heroes. We have people that set at 25 million and they're struggling to get there and they look terrible. So you set your fund size beneath what you can realistically achieve by a large margin. And then you oversubscribe. Now, so let's say you set your fund size at 5 million, just a number. So what you want to do to close is get about your minimum amount you want to commit to do a first close from LPs is either $1 million or 10% of your fund size, whichever is greater. So in this case, it would be $1 million. So your target is $1 million commitments from LPs, and that's very achievable, right? In fact, probably everyone here could do that. It's like raising $1 million for a startup. Now, then you'll have to raise the full 5, and that's always tricky, but you can do it, right? Second point is, as the GP, you're expected to put 1% of the fund size. So again, at $5 million, that's $50,000. If they're 2 GPs, then they're equal, then it would be 25,000 each. But you don't put 25 or 50,000 right away. You put it in the capital call structure that the fund has. So if the fund has a number of capital calls, let's say you do 1 call a year for 25% over 4 years, which is not uncommon, right? Then, let's say it's 100,000 for even number's sake, then you would put 25,000 to start. And then when you do the second call, you do another 25,000, et cetera. So you put 1% of the fund size yourself split between the different GPs, and that follows a capital call structure, which is another reason to do a smaller fund size, because then you don't have to put as much money in.
If you're a US-based investor who's investing overseas, where do we see funds being domiciled most often?
Yeah, that's a good question, Wade. My tea has some syrup in it, and it's like making me a little let me see if I can do some throat spray. So everyone's domiciling in the US. Everyone. There's some can you put the domicile report for Delaware
on it?
Excuse me. So everyone's domiciling in the US. There's some exceptions. We cover them in the article that Niels is putting into the chat, but it's just so much cheaper, so much faster, so much more efficient, so much less red tape, so many better vendors, that to domicile anywhere else in the world just is ridiculous. You're literally, just to give you an example, one of the next least expensive places might be Europe, and it's 5 times more expensive to set up and operate a firm in Europe than in the US. And that's one of the other cheaper places. Cayman, super expensive, even more expensive in Europe. Singapore, more expensive. So you set up in the US.
When is the Venture Institute starting?
Yeah, the Venture Institute is our free training program for people just interested in venture capital. The next one begins in October. I believe you can you could put the link in there as well to it. In addition to that, we're open sourcing the first 4 weeks or 4 sprints of training material. The next set is going to drop later today. And if you want a venture capital like 101 education, it's actually the first 4 weeks, you're probably getting a little beyond 101. Just read the materials. Now we have exercises and things that are, and again, we're giving it away for free. The Venture Institute's free. The training materials are free. You know, VC Unlocked is like $25,000. Kaufman Fellows is like approaching $100,000 a year. I mean, it's like highway robbery, and you wonder why there's no innovation in the industry. Well, like, you know, there's no way to learn the industry. There's no way to get involved in the industry without spending tons of money. So of course, who can spend tons of money? Rich people. So who continues to dominate venture capital? Rich people. And like and look, I mean, it is what it is. I'm not judging, but it's obviously is not leading to great outcomes for humanity. So we're going to change it.
So we have a number of people wanting to know more about the status.
Well, we'll do their
application.
status of application in a little bit. Let's go. We're going to run over, guys, by a few minutes because I started a little late. My apologies. Let me just double check my calendar right now that that's all good. It should be good. I can run over by as much as 15 minutes because there's lots of good questions here. So let's go through questions, and then we're going to get to some applicant statuses second, and I can even give you feedback on your application.
Sounds good. Question from Eliza. What kind of work can a consultant offer to venture capitalism?
Probably not that much. I mean, you know, either you go into the VC industry and you're in the VC industry, but like venture capitalists don't hire too many consultants. They will do large venture capital firms at late stage hire consultants to assist with due diligence, and technical due diligence is one area, right? Maybe some market due diligence, maybe, though that's less common, but the most common one is technical due diligence. Now, VCs have lots of what are called venture partners, and these venture partners, and if you could share out the venture share agreement, Niels, in the chat. We create an agreement for venture partners to give you a sense of what VCs hire, like what you might think of like consultants, but in venture capital, they're called venture partners. but they don't get paid. So they get carry upside. So they get upside in the fund, but there's usually no cash compensation for venture partners. And you can look at the different things that venture partners do in the link that Niels just showed out.
What are the potential conflicts or complexities that arise from dual regulatory frameworks, such as domiciling in Delaware and working in the Middle East?
Yeah, I mean, nothing really. You know, it's not that there's conflicts of interest. That may be the wrong way of phrasing it. You have to. Okay, so to take a step back, the kind of crappy thing about multi-domicile or multi-jurisdiction operations is that you have to abide by the laws of all the jurisdictions that you operate in. And this is why a lot of venture capitalists don't do a lot of like they don't do, like, I invest worldwide, says no one ever that is experienced. Because then you have to, like, let's say you do a deal in Nigeria and you do a deal in Kenya and you do a deal in Chile and you do a deal in China. You have to manage the legal frameworks of all of those countries. And your LPs have to file taxes and things and regulatory stuff in all those countries. And nobody wants to do that. Okay, so this idea of this global investing is just BS, because the GP doesn't want to do it, the LP doesn't want to do it. So even if you could do it as a GP, the LPs wouldn't want to fund you, so you wouldn't be able to raise a fund. Now, funds like almost every LP has a fund in the US, right? Because that's where like most of venture is. So domiciling in the US is like every LP of any kind of stature understands having a fund in the US, because that's where most of the funds are. That's where venture was born. So it's not that big of a reach to ask someone to be in the US. And the US has the lightest regulatory load of any domicile anywhere in the world. You hear about the Caymans and you hear about BVI, they all got nailed in the pandemic because the EU blacklisted them and they had to add regulations to get off the EU blacklist. And as a result, they're very regulated right now, way more regulated than the US. So the US is currently the least regulated domicile in the world. And so it's relatively easy to comply. So you'll need to comply with the US regulations and the regulations of where your LPs are, as well as where your startups are. And that's the complexity, but it's not that complex because, as I said, usually the US regulations are the easiest. It's really the regulations of the other places that you have to worry about.
Question from Peter. What happens if some of the LPs are unable to honor a capital call?
Look, that happens. LPs don't honor capital calls all the time. So that's governed by what's called the limited partner agreement. We have a very amazing free limited partner agreement called the Cornerstone. You can put a link in the chat to it, Niels. The Cornerstone gives GPs a very wide latitude on what to do if an LP misses a capital call. Basically, the Cornerstone says you can do this, 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 and this, but at the end of the day, it's completely up to the GP what they want to do. Now, a lot of other LPAs aren't so flexible or understanding, so it can go kind of any way. Like there could be extreme penalties to extreme forgiveness. Most of the time, it's extreme penalties. One of the things the Cornerstone does that's a big innovation is if someone doesn't meet the first capital call, the GP can cancel their investment out and remove them from the fund, which most LPAs don't do, which means that if someone never wires, and this happens a lot, you have to spend kind of like tens of thousands of dollars in legal to remove them from the agreement, which is just ridiculous. I mean, it's great for lawyers, but ridiculous for a GP.
How does the ownership of the fund work? Suppose we have two general partners in the VC fund, and then we have the LPs investing. How do we distribute the exit proceeds or return after the time frame?
Yeah, so everybody, I know some people need to leave. We've run over a little bit, but hang on if you want. I'm here to continue answering questions for a little bit more. Don't forget, though, if you haven't gotten your application in, please get your application into Cohort 12. Cohort 12 will give most people a realistic shot of closing a fund in 2023 and being a vintage 2023 fund. Some people will slip to 2024, but a lot of people, not most, maybe 40 to 60% should be able to close in 2023 from Cohort 12. And hopefully it's towards the 60%. We then will have Cohort 13, and maybe 10% of Cohort 13 will be vintage 2023. Maybe put a link into the chat about vintage 2023, Niels. It's this, everybody, and we're seeing this in the data, feels that vintage 2023 will probably be the best vintage year in history for venture capital. Vintage year matters a lot. It's like you could be a top decile performing firm, top 10% performing firm in 1 year, and you might actually, one vintage year, and because that vintage year was not a good vintage year, you could actually perform worse than a top quartile fund in another year that has just a better vintage year, right? Because for whatever reason, like great companies kind of get started, valuations are down, and these periods of time, like 2009, 2010, fantastic vintage years, like Slack, Uber, Instagram, all these like they're literally 10 or 11 household name companies that were started in that time frame, and obviously venture returns were insane. So back to your ownership of the fund question, Debasis. So the ownership of the fund is, so funds are owned by the LPs and they're managed by the GP. Okay, so that's the way to think about it. And the fund structures have three entities: a management company that owns the brand, a GP that distributes the carry, and then the fund that is owned by the LPs. And the exit proceeds, actually, you know what, put the Venture Institute link again for Debasis. We're actually publishing articles on all this today in a few hours, because sprint 3 of the Venture Institute is venture economics, and we walk through all of this in pretty great detail, including the metrics. So I could spend a lot of time answering it right now, but essentially you can read kind of in great depth about it in a few minutes, the 2 and 20 model, et cetera. So the link's in there, check it out, and you'll learn all about it. Let's get to the next one.
Okay, if you have one person on the investment team and we have 2 venture partners and 4 advisors in the management, but they are being paid from a discretionary carry pool and GP specific to that fund, are those individuals people that we should be inviting to these sessions with us too? Yeah,
so only GPs, no VPs, and only GPs are invited into the program. So, and we'll find out. So if there's VPs in the program, we invite them to leave. It's not that we don't want them. It's not, the program is designed only for GPs.
Would there be a benefit for multiple solo GPs to share an entity or group rather than incorporate separately?
Multiple solo GPs to share an entity? No. So look, there are, you're talking about driving down the entity costs. Again, Decile Partners is half the price of anything else out there, and it's not that expensive, and those costs are covered by the LPs in what are called fund expenses. Now, and even the LPs in the end really don't pay for it, because what ends up happening is, let's say you have a $10 million fund and let's say you have even $3 million in total fund expenses over the life of the fund, that comes out in that you only have 7 million to invest, right? But what happens is, let's say you make $20 million. Well, the LPs get $10 million back. This goes back to the fund economics question before. So they get the full amount of the 10 million back, even though you spent 3 of it on expenses, et cetera. And then after that, you're in carry. And so that second 10 million, you know, the GP would get 2 million because it's usually 20% carry, and the LPs would get 8 million. So I don't worry too much about the costs, saving costs here. There are low cost providers. Well, actually, they're high cost providers, but low effort providers. So like AngelList syndicates, AngelList rolling funds, you can set them up instantly because they're actually not funds. You just become a consultant to AngelList. So AngelList is the manager, AngelList owns the entities, AngelList owns the bank accounts, and you sign a consulting agreement. And so you can set these AngelList things up very quickly, but they're expensive because there are tons of fees that they charge on the back end, and you're not actually a real venture capitalist. You're like a fake venture capitalist, like you play one on TV. And so when you go to start a real fund, if an LP says, oh, what have you done before? Oh, I ran a fund on AngelList. They're like, no, you didn't, because you're a consultant to what AngelList owns the fund. AngelList owns the bank account. So it doesn't really count to track record, but that's a way if you want to like cut time and pay higher fees, though they're hidden, but pay higher fees, you could go that route. That we don't work with AngelList funds because we're trying to build a new class of managers that is going to make the world a better place, not like play part-time venture capitalists on the nights and weekends.
Does Desal's fund administration have experience with filing with FINRA, SEC style regulators around the world?
Yes, but usually the manager, so we only cover certain domiciles. So we'll do the required filings in our domiciles. Some domiciles, Israel, et cetera, require additional filings, even if you're not domiciled in Israel, but you, the manager, are in Israel, as an example. And we're aware of what those filings are, but usually we work with the managers to produce and send them in themselves.
Did we do more questions or move on to
let's do 2 more quick questions. Why don't you scan for good ones, and then we'll look at some applications. While you scan for the questions, I'll pull up the application stuff so I can find people. Yep. You got it? 2 questions quick.
Vishesh is asking, am I at a disadvantage if I want to invest in India, but I have to set up in Delaware?
India. India is one of the domiciles where it makes more sense just to set up in India. Now, some firms, we have a bunch of firms in India that's, whoa, I'm having weirdness with my, we have some firms in India that's set up in Delaware because they're doing kind of hybrid strategies or stuff like that. But if you're primarily investing in India and you're primarily getting India LPs, you're going to want to set up in India. And that's true for a number of regions in the world, just to be super clear. If you're primarily in the region, if you are in the region, your deals are in the region, and your investors are all in the region. So let's say all in Germany, all the deals are in Germany, all the LPs in Germany, you're in Germany, probably makes sense to set up in Germany. But that's not the way the world works today. That's more rare than common. The common thing is you have LPs from all around the world. You're doing deals some in Germany, some in the US. You know, you're not doing it in a million different places, but you'll do it like to say you won't do a US deal in 2023 is possible. Let's say if you're a focused Africa fund, but like just to give an example, most African startups themselves are domiciled in the US. So all African funds are domiciled in the US. So happy to go through this a lot more. Let's go into some applicants though quickly. Why don't you, you can either private chat them to me if you want, and I'll look them up and then talk about them.
So the first one is Ashir Rahman.
If you could chat,
Yes.
if you could put it in the chat for me, because I gotta search the name, and otherwise I can guess how to say the name, but spell the name. I mean,
Yep.
okay.
Put
So
it in
let's
there.
see. So I'm gonna you're gonna gain a little insights. Let me see. You're not the only Rahman to apply. So Ashir, there's lots of people with your last name that have applied. You haven't been scored yet. So you submitted your application 8 days ago, updated it 5 minutes ago. And as I mentioned at the beginning of the call, we have a pretty big, a ton of people submitted applications in the last minute. We went from like 1,500 to over 2,000. So it's like, we're just cranking through it. So it's not, and not done yet. No worries. It will get done. Everyone we're doing it in order of received, which is why I'm telling everyone here, apply now, because sooner or later it will fill up. And then regardless if you have the best application in the world, there's just no way you can get in. We will make exceptions if a manager that we really, really respect says, hey, you have to let this person in. Even if the program's full, we'll let you in, but that's about it. Just FYI. Okay, so then there's we got another one here. Giacomo, nice to meet you. I'm looking you up right now. For some reason, it's loading slowly. Maybe there's a lot of Giacomos who also applied. Let me try this again. I'll stop and
go ahead and put the next name already.
Yeah.
In here.
Okay, I found you. You have been, oh man, Giacomo, it looks like you have not been scored as well. So, sorry about that. Again, you haven't been scored for the same reason. So let's see if I can find someone who scored. We got Minu now. Okay, let's see if that's coming through. Or no, wait, who? Let me see. Oh, you know what? I think you used a different, there's someone who put a name Minu, but we're finding the name and that hasn't been scored. It's a different first name in the system. So let me move on to Dahlia. Okay, Dahlia, you've been scored. Woo, we found someone scored. I'll tell you, you got an application that is probably not going to get it. Okay, I'm always going to be candid. Don't take it personally. I'm going to tell you what the issues are, and I'll tell you how you can fix it. Okay, and for everybody here, you're going to learn something about me. I'm always going to be a straight shooter. I'm always going to tell you how things are. Sometimes they're great, sometimes they're not great, and it's nothing personal. Okay, so I'm looking down at your application. So let's talk about what the concerns are. So we look at a number of different areas and we score you. So I'll go through each of the different areas and this will be instructive for people. So in terms of your follower count on LinkedIn, you're doing really good. You have a good number of followers, so you're rated highly there. You've got your background score isn't great, and I'll tell you why. So you haven't done a lot of investing. That's okay. You don't have a lot of LPs. That's not great, but that's okay. But generally, we don't score people very well if they're a consultant. So just as an FY, if you're a consultant right now, we score everything 1 to 5. you're not going to get above a 2. So that's that you got ding there for being a consultant, or at least that's what I can see here. Maybe there was another reason, but I'm guessing it's a consultant based on what I'm seeing. Next, we look at your thesis. Here, your thesis was weak, right? We have tons of material. Can you put the pre-curriculum in the chat, Niels? We give you tons and tons of material. There's even a tool on ChatGPT to help you with your thesis. And so you got a 2 out of 5. So that really hurt as well. Everybody here can do a better thesis, and then you would get a 4 out of 5, and your chances of getting in would go way up. Moving down the list, your need was scored pretty badly. I'm going to ask that. So I would go back and update your application, because you could update your application and your video was scored really badly. So, and then, so those really dragged you down. Your need, your thesis, your need, your video dragged you way down. And then the fact that your consultant didn't help. So if you can fix those things, your odds will get a lot better. Let's do 1 or 2 more. And then we should wrap just in honor. I was late, but I love chatting with everyone and helping as I can. So let's see, we're looking up Grace, if I can find you. Okay. Grace, you didn't make the cut either. Okay, so let's go through. Probably the main reason is you're not doing a venture capital firm. I know you're calling it a venture capital firm, but you're going after farming, and that's just not what you're presenting is not a venture capital firm, right? So you're going after chia seed farmers in Africa. Venture capital firms are very well defined things. You can go to the Venture Institute materials and read about it, but you need to invest in things that are going to have multi-hundred million or multi-billion-dollar outcomes for it actually to be a venture capital firm. And there are lots of people in the world today building all sorts of innovative investment vehicles, and they like to call themselves venture capital firms, but the reality is that they're not venture capital firms, right? And so, and that's because venture capital is making lots of money, has all the hype, so people are like, I'm a venture capital firm, but in reality, they're not. So back to the point, in your case, it's not a venture capital firm, but it doesn't mean you shouldn't do it, right? Let me just see, and let me see. There's a lot of names in here, so I'm looking them up to see if they're done. But if I'm not calling your name, it's possible you haven't been scored yet. I'm just not saying everyone that hasn't been scored. I'm searching different names to find people that are scored. So here's the last name. So if you haven't called your name, there's one last name I'm going to check. Yeah, no one else has been scored yet. So don't take it personally. As I said, hundreds of people came in the last few days. So we have been shoveling our way through hundreds of applications. And that's another reason we extended, because we're like, oh my God, we have lots of applications to process. So thank you very much, everyone. I really hope to be working with you one-on-one to help you build your fund in cohort 12. And if not cohort 12, maybe cohort 13. And if that's not a fit, maybe Venture Institute's better for you. If you want to start learning about the industry in detail, all that stuff is freely available. And this has really been enjoyable. Thank you for the fantastic questions. Have a lovely day, everyone. Thank you.
Bye, everyone.